Welcome to the Aaron Katzman Show. I'm your host, Aaron Katzman. We speak to your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon to be financial capital of the world, Jerusalem, Israel. If you like this content, please hit the like button below. If you've not yet done so, please subscribe to both the YouTube channel and to the podcast. And if you think somebody out there, some contact that you have may actually find some of this content interesting, go ahead and hit the share button and you can share it with them as well. So mirror, mirror on the wall. Actually, that's probably not true. It's more like a crystal ball. I came across a fascinating article, and it's actually an abstract. It's an academic abstract. This is highbrow financial podcasting. I can tell you that right now. Okay. The title of the abstract is When a Crystal Ball Isn't Enough to Make You Rich. It's written by Victor Haghani and James White. Okay. I'm going to read the abstract, and then we're going to get into it. Bear with me because I'm reading in small print. And my vision isn't what it used to be, put it that way. So if there's some mistakes, still just bear with me. The authors ran an in-person proctored experiment inspired by a 2016 tweet from Nassim Nicholas Taleb. If you like this is what the tweet said. If you give an investor the next day's news 24 hours in advance, he would go bust in less than a year. That was the tweet. The authors called the experiment the Crystal Ball Challenge. They gave 118 young adults trained in finance $50 each and the opportunity to grow that stake by trading in the S&P 500 index and 30-year U.S. Treasury bonds with the information on the front page of the Wall Street Journal one day in advance, but with stock and bond price data blocked out. The game covered 15 days, one day for each year from 2008 to 2022. In sum, the players did not do very well. About half of them lost money, and 1 in 6 actually went bust. The average payout was just $51.62, a gain of just 3.2%, which is statistically indistinguishable from breaking even. The poor results were a product of 1, not guessing the direction of stocks and bonds very well, and 2, poor trading sizing. Many of the players use excessive leverage relative to their exhibited edge in guessing market direction. To gain further understanding, the authors invited 5 experienced macro traders, 4 men and 1 woman, to play the game with markedly better results. The group of 5 consisted of a head of trading at a top 5 U.S. bank, a founder of top 10 macro hedge fund, a senior trader at top 10 macro fund, a former senior government bond trader at a top 3 U.S. primary dealer, and a former senior Jane Street trader. These players all finished with gains. On average, they grew their starting wealth by 130%, with a median gain of 60%. All of the players were selective and highly variable in their trading sizing. These veteran traders predicted direction of the market significantly better than the 118 younger, less experienced participants. 63% versus 51.5%. But mostly the authors ascribed the dramatically different results to the much more sensible trade sizing displayed by the experienced traders. One conclusion of this experiment and article is that there is little value in crystal ball without sensible trading size. I found that just to be fascinating. It's another example where regular people are not able to do better than professionals. And here, right, the regular people were given the information, right, a day in advance. They knew the news, and yet they still weren't able to make any money on it because there are other variables involved, right? They didn't know how to trade well. There are all these other, their sizing was off. It just goes to show when you try to beat the professionals for 90 whatever percent of investors, it's a fool's game. You're not going to be successful to do it. And that's when you're handed the information. Right? You can't ask for more than that. And I see it all the time. In fact, I've spoken about this recently where just based on who's the president, right? So they said back in 2016, well, the obvious trades were going to be, old traditional energy. That was going to do well. And we know what happened. You want to short alternative energy. That was Trump 1.0. Well, what happened? alternative energy stocks trounced, big oil. It wasn't even close over the 4 years of Trump. And then conversely, everybody said, well, Biden's coming in. Let's stick with that alternative energy trade and let's get rid of big oil. What happened? Exactly the opposite. Who outperformed who, right? It's very, very difficult. Even if you know and you have information. I'm not talking about illegal insider information, okay? So if you're thinking about that, forget about it, because that's illegal. Just regular news, even if you have somehow news before everybody else, right? That's impossible, pretty much in today's day and age where the news cycle is 24/7, and everybody gets the news at the same time, basically. Even with that information, you're not statistically going to do better than the professionals. In fact, you're going to do much worse than the professionals. So why try? I know it's fun, right? And for people who like and enjoy trading stocks, that's cool, okay? There's nothing wrong with having like a carve out of your portfolio, 10, 20% of your portfolio, where you can buy and sell individual stocks. I'm not opposed to that. But when the goal is actually to grow wealth and make money, the lion's share, the overwhelming majority of the lion's share of your wealth should just be put into things pretty much which track the market, because you're not going to be able to outperform. Of all of you watching, the hundreds of thousands, if not millions of views that this video is going to garner, 100 of you will be able to outperform the market indices. The overwhelming, of the 999,900 viewers that are going to watch this video are not going to do as well as the market. So why try? Now, you want to have a little bit of fun. You have your ideas. You're not just betting on the latest penny stocks. So you want to take a certain percentage of your portfolio and trade stocks. I'm not opposed. Okay, I'm not opposed to it. But if your goal ultimately, or with most of your money, your long-term retirement money, if you want to try and grow wealth, you're just shooting yourself in the foot. Okay, all the data, this is just another piece of data. All the data says you are probably 90x% of the time are not going to perform better than the broad-based market averages. So why bother? Do other things with your life. Take your wife out to coffee. Something I do regularly. You can just ask her. Okay. Shouldn't have probably publicized that, but no, there's plenty of things you can do that have value instead of just, I got a call the other day. My friends told me to buy shares in NVIDIA. I said, are you aware of the fact like NVIDIA stock has moved up like 1,000% in the last week and a half? I'm not saying NVIDIA is a good stock or a bad stock. Okay. I'm not saying that. Do your own research. That's all cool, right? But my point being, like, your friends told you to buy this stock. Okay. Do you think that's actually a successful way to grow your wealth? Seriously, is it? I don't think so. Stay for most of your money, stay with broad-based market averages. But this was a very interesting test. I love the whole concept. You take a tweet and then you put it into practice, and you get a sample group and you see how they do. And the overwhelming majority of people without a lot of trading experience did miserably. And it's not a surprise. It's just another piece of straw on that mountain of evidence that is continually built that stock traders are not, especially individuals, are not going to beat the professionals. They're not going to beat the market indices. You've been tuning into the Aaron Katzman Show. We speak about your life, your money, and your investments. If you like this content, please hit the like button below. If you've not yet done so, please subscribe to both the YouTube channel and to the podcast. Thanks so much for tuning in, and we will speak to you soon.